9 a.m. on the West Coast right now. It's high noon in the financial capital of the world, and the unemployment rate near a 2-year low. But Wall Street not celebrating. Stocks are sinking on spiking oil and gas prices. Dow down 95 right now, also ahead. Charlie Sheen's drink of choice, you won't believe what it is. We talk with the man who is profiting big time as a result of that crazed star. And are they ready for some football? NFL players and owners take talks down to the wire, but we talk with super agent and former NFL star Tom Condon. Hi, everybody. I'm Cheryl Casoni. Joining me for the hour today, James Frischling, co-founder and president of NewOak's Capital and FoxBusiness.com star reporter. Mr. Dunstan Pryle is with me as well.
But most of the indicators that we're seeing on the jobs market say that things are picking up.
All right, so things are picking up, but Jim, the market is not reacting to things picking up right now. Dow down is 103.
I mean, I think it was an attractive number today, the release, and albeit somewhat expected. And I think the economy is facing some significant headwinds. Turmoil in the Middle East is certainly a big focal point. The continuation of the debt issues in Europe and our own at-home budget deficits. And then to the point about the unemployment number, clearly the headline is improving, but structural unemployment, I think, is not really being considered in this. And I think the Fed is on the page that, despite the good headline, which is important, I think the Fed sees that there's a lot of other things going on, and they're going to maintain the quantitative, let's say, easing programs and policies that they have.
But Dunstan, the labor force was up by 60,000, so we did add something there. And the private sector numbers are actually, they seem fairly decent.
I'm a big believer in the psychological boost of this numbers. We were talking earlier, and financial journalists like us, we can parse these numbers all we want. For 2 years, this number has been near 10%. That's a psychological downer. Now, not only are we well below 10%, but we're dropping below 9%. For the average consumer out there, they see that, they're aware of these numbers. I think it's a confidence booster. I think maybe it helps them get out there with a little more confidence, a little bit, going to buy something.
Michael,
that's good for the economy.
Michael,
right now, the focus on Wall Street, they're sort of past the jobs number, right? They got through that at 8:30, through 9:30. They're really watching oil. They're watching 103.87. Is it going to be 104? What's it going to be at by 1 o'clock? You know, this is the worry that really hovers over Wall Street.
And real quick, Jim, you're nodding your head. Why?
I was going to ask Michael, in terms of your hiring right now, is this more of but based on your demand, your company's demand, or I guess is this a supply of people available to you, very favorable to you as a small business owner? I mean, are you chasing the market, or is the market coming to you? I'm sorry to interrupt.
Well, we're going to the market. We're being aggressive. I want to say there are 2 programs that President Obama has championed that really, I feel, is going to be a big boom for the economy. And the 2 programs are the Section 179 deduction for new equipment. We are going to purchase new equipment based on that deduction. And also the Small Business Administration, the rates are more favorable, the terms are good. We're adding on to our facility. So from our standpoint, and I can only speak for my business, is, you know, we're aggressive. I have a phenomenal team, and that's what it's all about, the human resource factor. And I think that's the key.
All right. Michael Donovan from Graphic Shop, thank you very much. Nigel Gold, IHS Global Chief U.S. economist. Thanks to both of you. Of course, Nicole as well. Well, we just heard from...
You know, look what's happening in this area right now. This is serious. This is not, a test of the emergency broadcasting system. This is a real emergency. I think they're fairly pricing this.
Here's the thing, and Jim, from a stocks perspective as well, you always try to be ahead of the curve. If you're an investor, especially if you're professionally managing money, as you are, you need to protect folks. You need to protect your clients.
And you bring up a good point about the contrast right now between the turmoil in Libya and what we saw in Egypt. Egypt, not as significant oil producer, and it was more about the Suez Canal. Now you have security forces in Libya firing on its own people to disperse the protests. And I think the idea that this is going to be quickly resolved is remote. And I also think with the Libyan National Council head screaming victory or death, I think you're seeing a spike in oil that will continue.
Dunstan, I mean, we are seeing they want democracy. I mean, this is spreading throughout the Middle East.
I'm hardly diminishing the seriousness of what's happening over there. My only question is, who does it benefit to start blowing up the supply system or the fields? It doesn't make any sense for them, for the people who are perhaps coming into power or for the guy going out of power. It makes no sense for them to disrupt those supplies.
And because we're a small Southern California-based dairy. We're we're not out there on the national level, but by golly, this has really been a trip.
I mean,
to say the least.
Is this a case where any publicity or all publicity, as long as they spell their name right, is good? I mean, congratulations on your success, but there is a lot of negativity, I also know, associated right now with Charlie Sheen. I mean, my mom is done with him, and as far as she's concerned, with CBS pulling the show off the air was the right call. So she's not going to be one of the followers of Charlie Sheen. And is there a large group like that where there could be some backlash? It's obviously working for you, but for anyone out here, do we think this is all good news for anyone that Charlie Sheen touches?
Well, but Ray, you are getting orders. The opposite's happening. I mean, no matter what, they want your milk. And we should say you're a tiny dairy. I mean, do you even have a website,
we
Ray?
No, we don't.
You don't have a website. Well, okay. Okay.
Sorry about that.
But this wasn't a paid tweet. Now Charlie's trying to monetize his efforts and wondering if
Pepsi's called or whoever.
All right, for the few.
And then the fifth thing to mention is that everything is always changeable. Everything is refundable. Everything is transferable. Even when you hear about a non-refundable ticket or something that's not changeable, there's always a way to do it. So sometimes it's just a question of finding the right person. For example, with a Priceline hotel reservation, supposedly it's non-refundable, non-changeable. If you call Priceline, they won't budge on it. But the trick is to call the property directly. If you call the Priceline hotel, then they actually have the authority to do that. And at least 50% of the time, they'll make the change for you.
You're an outstanding frugal traveler. Is there one memory? Is there on the list of your best trips? Was there one deal you were able to strike that you could share with us? One that's most memorable?
I just traveled to Bangkok, Thailand via Frankfurt. I had a free stopover in Kazakhstan as well. This is all one trip, so it's a completely round-the-world trip. Came back home through Vancouver, and that was with miles. The miles cost me about $400 to obtain, and this was a first-class trip. So that was probably about a $7,000 to $10,000 ticket that I did for about $400. And that was just one thing. I mean, I do this every year, and a lot of our readers do as well.
All right, Chris Guillebeau, who I'm assuming has some sort of day job as well, but fascinating stuff, and frequent flyer, master author, master of the airplane. Thank you very much. Best guest time. Read all the best guesses and commentary at CasoniExchange.com, and follow me on Twitter at Cheryl Casoni. I follow Charlie Sheen on Twitter, by the way. It's been interesting. James, what's your best guess today?
Sure. Municipal bonds. You've got the financial crisis, a star banking analyst predicting hundreds of billions of losses and some political turmoil in state capitals, and the result is about 13 straight weeks of outflows from Muni investors. So is this doom and gloom, or has this just created one of the greatest or a great buying opportunity in a market that's typically pretty stable?
Are you talking doom and gloom with Nouriel, or are you talking about Meredith?
Well, you got Meredith doom and gloom, and you got lightweight doom and gloom, and Nouriel's about a tenth of Meredith's losses. But my feeling is this is a market that will bend and not break. So the more the outflows and the more the prices get depressed, the more I'm liking munis. And also, please note that the average recovery rate on muni bonds is about 80% as a result to a very friendly bondholder municipal bankruptcy code. So if I'm wrong, you at least get a little downside protection.
All right, that's good. Well, protection's good. All right,
I did that story for FoxBusiness.com last week, isn't it?
You and me, man. There you go.
Collective bargaining. It's under fire in Wisconsin and Ohio, other places. My best guess is reform, perhaps maybe some transparency in these negotiations going forward, but it's not going away. And my proof is that in New Jersey and New York, states where far more fiscal crisis going on, it's not even on the table. So what I'm saying is perhaps it's not the boogeyman it's being made out to be, and I don't see it going anywhere.
My best guess is we go below 12,000, but it's next week. And that is it for all of us. And